Chainlink price update. We're going to start here on the daily, and then we'll zoom out to the weekly, and I'm going to focus on that more. Look at what we need to be watching for to, close out this week, close out October, start out November. The good, the bad, and the ugly. If you like the video, give us a thumbs up. If you want more help navigating the cycle, daily updates, more educational content, consider subscribing through Patreon, link below. And let's get right to it. So link 1824 as of right now on the daily chart. So what do we need to be focusing on this week? Well, I would think maintaining our lows, right? We do not, you can see this dark line right here. That's the 600-day exponential moving average. You don't want to be closing under there. When you do, right, like we did back earlier in the year, right? It's just you're in a position of defense, right? And you can't do anything. You're just spinning your tires down there. So on this low flush that we got the buy of the century, we came back up, but we did not close there, right? If you put on closing prices, closed right on the 600. So that's first and foremost, right? We want to stave that off all week, all month, all year, all decade. Wait, we'd ideally not like to be closing back under there. That's really it for the daily. That's all we want to focus on. Sure, we'd like to go higher. You could see this previous swing low to swing high, right? And coincidentally or not, right? That's kind of that $20, elusive $20 level for Chainlink, right? You can see that's pretty much a clear flip point for the bulls. Get back above there, and we can start cooking again. Otherwise, this is our lid, right? That's resistance until proven otherwise. So which one's going to break first? We got to hold this as our support zone, 17 to 1650 area, or our resistance zone right around the $20. Break through one of those. Ideally, this one. We would like to have that low forming. Okay, so let's look at one more thing on this daily, then we'll zoom out to the weekly. So in your perspective, this looks pretty bearish, right? But we're on a downtrend, obviously, lower lows, lower highs. But I always invite you to invert the chart and see if your bias is still there, or do you see something maybe a little different? So if we do that, well, imagine we're in an uptrend now, right? Well, what kind of fear would that instill for bulls, right? If you bullish moved up there, that would be holy hell. What a move. But then we sold it all right back off, right? That'd be a warning that we're about to reverse, maybe, right? But on the typical price, everyone just gets scared of this. Oh, there's more danger coming. But if you look at it from this, it's like, oh, there's danger coming. You can't have it both ways, right? So to me, the majority of people see that as bearish, where you should be seeing that as a bullish reversal sign, right? If you got it like this in the inverse of this chart, that would be like, oh no, that's not a good sign, right? We're easily getting ready to move back down. And then look at this move, right? So if we play connect the dots, pretty sure you can do that. Look at this nice uptrend, and then, oh, we started to hesitate here, and now we're kind of seemingly reversing, right? Now you get this kind of rounded right at a major moving average, right? 600, right? Remember we talked about that? Well, look at this rounded bottom, right? Rounded top. At the same time, you're putting in these higher lows here, right? Decision time is coming. Maybe this week for a bigger move. But based on this chart, it looks to me like this is potentially forming a rounded bottom. We need to just get a nice breakout here. Again, there's that level that we looked at, right? The $20 level. If we can get above there, there's big implications to that based on this whole setup here. So it looks pretty great to me. Great recovery, flash crash, black swan, gray swan, whatever kind of swan you want. I think that's all it was. I like this formation as long as it holds, right? What would be a bigger warning and kick rocks, head down, tears falling, flannel ripping. So if we close under the 600 EMA, that would be that would be a tough pill because that was going to let a lot of wind out. Just like you would if you break this, right? If you look this in an uptrend, right? Where's the line in the sand? Well, we would start to make some headway back this way, perhaps, if that breaks. But until then, I like our chances. All right, that's what we're going to focus on this week. Watch all that. We'll do more updates for Link. But now let's get the chart back to normal. Let's go out to the weekly where we need to focus on the bigger things at hand here. So Bollinger Band's still way the hell wide. That's not really helping us, so let's get rid of those. What we do need to look at is the Gaussian channel. And again, the lows here. There's the 100 week in the blue and the median Gaussian channel. That's all right, just north of $16. Again, we started off on the daily looking at around that $16 level, needing to hold for the 600-day EMA. We also have the 100-week EMA right in there and the median Gaussian channel. We don't want to be messing with that. Now, this W pattern that we hoped would play out is all but falling apart here. We're on our last kind of thread, right? We have previous range highs before we started, building this other part of the W here, right? We have these range highs now flipping to range lows. If we start to kind of chop more, that negates this altogether, and there's really no more bullish to take out of it. Maybe we're just going to consolidate and then build back up again. But we're running out of time, assuming that this cycle still peaks in the next 2 to 3 months. We still have it. We still have the time, but we can't. We don't want to be opening December 1st still battling $20, right? We don't want that. So I would say patience. But if in 4 weeks we're still around these prices and not at these prices, cycle highs, 25, north of 25. If we're not north of 25 within a month from now, could be duds. Not real flannel, right? Go with that. All right, so that's what we want to be watching out for, the warning sign. Again, if you start to get under this median Gaussian channel, that's a bearish, right? We don't want that. That leads to consolidation for a while, right? You just lose all your momentum. That's not usually a quick recovery when you do that. And again, if we did that, right, well, given the time that we have left, we're kind of out of time, right? So we don't want to do that. That's our primary focus. To the downside, to the upside, and it's not much. We're not asking for a lot here. But look how well defined this is. You got range highs and your 21-week EMA right there. 1950. A lot starts to go our way if we can just recover $1 or $2 within the next weekly close. So this week, that's our primary focus. To the bull side, get really 1950 or higher would be great. And not close under 16. That would be the opposite of great. All right. What else do I want to show you? How about our 1 year moving average? Well, that's this big, thick white line here. And that's kind of right where we are now, coincidentally or not. So we're right in the middle of the line. The annual moving average, roughly. Okay. How about a parabolic uptrend? To trigger a new uptrend, by definition, on the weekly for the SAR, we have to trigger 2670. Take out that high. Moving down week over week. Give it another couple weeks, maybe it'd be around that 25 level that we just looked at. Anything else? Not really. How about to close out the month? Let's see what we got. We'll probably do an update on this as we get closer to the monthly end. That's Friday, last day of the month, Halloween. Should we wear our flannels for Halloween? Nothing scary about Sergey. Let the monthly close, ideally, right? Get the hell out of this Gaussian channel. That's at 2062. So as of Friday, we'd like to close 2062 or higher. Not necessary, right? It's not a huge thing, but just if you want to be blue flannel, perfect. That'd be great. What we wouldn't want to do again is kind of lose our EMA 8 on the monthly. Last time we did that, it took some time. Before we made new highs, right? There's a close under the EMA 8 monthly, made lower lows, consolidated for a while. There's a close under the EMA 8 monthly, made lower lows, consolidated for a while. Or so far, we're holding above the EMA 8 monthly, the red line. That's at 1811 as of right now. So come Friday, there's your ideal spot or higher. All right. Anything else you got? Let me know. Chainlink, Monday update. Happy flannel.